Hello everyone, I hope you are all having a great week. My name is Drew, the host of Never Behind. On November 6th, WeWork, a company that is in the office sharing space that was once valued at $47 billion, filed for bankruptcy, which surprised so many investors not just because it was a fast-growing company, but because it was one of the representative companies in the commercial real estate industry, which had been known to be struggling with a high amount of debt and was in more trouble due to the increase of the interest rates. Now, if the offices were going out and the rents were being paid, it wouldn't have been much of a problem, since they could have collected the rents and paid the loans for the buildings or offices. However, during the pandemic, people got used to working at home and found opportunities making a living without heading to the offices, and even after the pandemic, many people have started to apply to positions that were remote, making it even worse for the offices. Now, the interest rates have been rising aggressively in order to lower the inflation that on June 2022 went all the way up to 9.1%, which triggered a huge issue for the commercial real estate regarding refinancing. And the worst part is that percentage of office vacancies at areas even like Manhattan or San Francisco were 23% and 32%, which was almost the highest in history. Now, the Fed has made it clear that even if they do not have any more hikes, they are planning to keep the Fed fund rates at this high level for some time, which will have a devastating impact in the commercial real estate industry that has over 1.2 trillion in debt. Now, investors are getting concerned that the bankruptcy filing of WeWork might just be the beginning, and that more bankruptcies of commercial real estate buildings or offices will follow as well. Another major issue is the impact that the default of commercial real estates will have on regional banks and unemployment rates as well, which can even be a trigger for a major market crash. So in this video, let's take a look at how the filing for bankruptcy of WeWork might end up triggering a major market crash. I also wanted to share that Moomoo is having a great promotion, giving out 15 free stocks, which I think no one should miss. So if you want to receive 15 free stocks, make sure you click the link in the description below. I've also started a Discord that's 100% free and have great experienced investors regarding stocks, options, swing trading, chart analysis, and even cryptocurrencies, sharing their ideas on opportunities for investments every day. So if you are interested in being a part of the community, please click the link Discord in the description below. Now, after COVID hit and going under a pandemic, there was approximately $5 trillion released as stimulus checks to support people that were struggling during this period. Now, thanks to these stimulus checks, many people were able to survive during the pandemic. But at the same time, this resulted in high inflation that went up all the way to 9.1% in June 2022, and the Fed had to aggressively increase the Fed fund rate in order to drag inflation down back to the 2% level. Now, inflation is coming down each month, but the costs are still very high, and we are still in an economy with an inflation of 4%. Therefore, the average credit card balance is over $6,000, which is the highest in 10 years, and the total credit card debt has bypassed $1 trillion in Q3 this year. Now, since we still have to eat and drive, no matter how high the price is, I'm sure that the credit card debt will keep going higher. Now, one reason that it's even possible to keep going with this much of credit card debt is because people still have jobs getting paid and can at least pay off a portion of their debt each month. Imagine what would happen if people were getting laid off and weren't able to pay these debts, but still had to use the credit cards in order to survive. That would be a very, very dangerous situation since credit cards also have limits. Now, the scary part is that the Fed is planning to keep the high Fed fund rate in order to drag inflation down to near 2%, which means that first of all, with the high interest rates, many companies will be struggling to pay their debts and therefore will have to lay people off in order for the company to survive. Now, the second scary part is that due to the high yields for bonds and the prices of bonds falling off a cliff, the banks that invested in bonds before the Fed fund rates went up are in huge unrealized losses. And based on the Moody's research, the unrealized losses for big banks were $650 billion. Now, as long as they keep their bond investments until maturity, they won't be losing any unrealized losses and eventually make money with the interest rates that will be received. But if companies are in trouble due to the high interest rates and need to cash out money from the banks will have to sell their bonds at a high loss to return their customers the money, which will eventually lead to another major layoff for banks in order for them to survive with their huge losses from the bond investments. Now, for some banks, especially regional banks that cannot get back the amount of money even after selling bonds to pay back their customers, these banks will fall and go under, as like what happened to Silicon Valley Bank early this year. And this for sure will cause so many people to lose their jobs. And finally, the third scary part of the story is that approximately 70% of the loans that were provided to the commercial real estates were from regional banks. So if a commercial real estate defaults and cannot pay their loans, this will then be a massive problem for the regional banks and can trigger a domino of regional banks falling. And eventually, so many people will be losing their jobs. And if this happens, how will these people even pay for their food and gas? This will cause a major issue in the economy, in my opinion. Now, I do think that this is one of the worst scenarios that can happen and hope that it doesn't come to this stage, but many investors are concerned about what will come next in the commercial real estate industry after seeing what happened to WeWork. I personally do think that there is a lot of problems in the market that still needs to be solved, and I'm keeping an eye on the news regarding layoffs since there has been another wave of massive layoffs happening in companies like Amazon, Google, Snapchat, Qualcomm, Expedia, Zillow, and so on. So I am personally keeping an eye on the unemployment rate since 4.5% is a level that mostly triggered a market crash based on the past recession history. So we will have to see what happens in 2024, but just because the Fed is not raising the Fed fund rates, it doesn't mean that the market is recovering and is in a new bull run, in my opinion. So with that, I hope this video was helpful and hope to see you on my next videos.